So today we are going to look at how to catch this Fed interest rate decision in Asia market, so that by the time this news event actually comes, hopefully it comes out as expected, like this, and then it just piles onto our trade that would have entered before in the Asian market. So let's start. So right here we've made a few markings. These two yellow lines represent from this Asian opening price to a distance of exactly 0.25% will take us to this line. Then also downwards 0.25% takes us to the yellow line. That's all we do on the 4 hour, we get those levels. So the other lines are marked from the 3 minutes, so we jump in straight to the 3 minute. The news event was on 14th December. So 14th December, here we are. Now, since the US is raising rates, we expect a strong dollar. So we are looking to sell gold. And that would mean on the upper levels, the upper limits we marked with a yellow line, and also right at this point we draw a horizontal line to mark where are we? Okay, yeah, we draw a horizontal line here to mark Asia open. Then we anticipate a 0.5 movement. We want to see our action right there at the 0.5 levels to sell. We are not keen on the lower levels. We don't want to sell on these lower levels. I mean, that's not the best price to get, so we still mark this blue line anyway. Okay, so we are not interested in this drama around the opening price. Give me some movement up here. As you know, our move 0.1 percentage change. If it's there, you can jump in for that sell. We don't get it, we have volumes, we don't get it at that level. Now see the drama unfold. We have these sellers that come, smash through the opening price downwards towards halfway. So right now we get an idea of these are not sellers, these are not this market was not going to touch our boundaries. So as at this point we anticipate to catch a sell in this area just by this characteristic here. They don't go all the way to the bottom blue line we marked for the 0.5 percentage price point down there. Then we anticipate that they'll probably go midway before they turn back. So how do we know? As soon as these buyers kick in with volumes, we start measuring our distance. You may give me this whole chunk, or just a few candles that move 0.1% for my key to enter. So we move. Guess what? With that candle alone, we have the 0.9% mark. We include the last candle, we have 0.11. We can go with this candle 0.08. Perfect. We have volumes in the lower side, which is perfect. So we copy this price, paste it in our Excel. This Excel has a few formulas to gauge using that price action where the price is most likely go. So we have the buyers, it's the buyers doing the action. It tells us to put in a sell order. The buyers are taking it up, so we are looking to place a sell order at 1813.16, 1813.13, 1813.16. Anyway, we never get there, so we put, once we see this candle come down, we put an order right here so that it's triggered, and then we jump in for a trade. Our stop loss is 1814.25. we are safely here somewhere above this blue line, so it would be our stop loss at approximately, using a one lot, you'd be at a $60 loss, $100 loss price band, stop loss price band. Yeah, so we sell at this point, we let the trade run. We usually take the first $400. I would probably jump out somewhere here, but I'm looking to catch the big fish. I'll just simply shift my stop loss closer later on. So the price keeps moving, it keeps moving. We're in this trade, we're in extreme profits as at this point. We are at a profit of let's see, we're at a profit point of $800. You can choose to take that 800 or leave it. Then as you can see, price comes back to retest this area. So if you had shifted your stop loss to entry point, or just a small take profit you wanted, you'd be knocked out. So some trades are best left. You don't shift the stop loss up until the last minute right here. So the news comes out after it has retested this point. In the last minute of the news, you want to shift your stop loss to somewhere with a small profit or at entry point, so that no matter the case, you would actually, in case the market is to reverse, it will give you a small profit here and then trigger your buy order. That's what you will do. Otherwise, you leave this trade running and basically you lock in some huge profits here. Let's see how much. This is USD interest rate decision. Now this interest rate decision is kind of funny. Dollar is strong, it will show some weakness, fetch a higher price and then continue down. So if you are a professional trader, you could actually leave it running and then, you know, get to bag some extra profits straight into Asia. Let's see how much you stand to gain. This was our entry point, all the way to London the following day. We're at a 3,900 profit. That's good. That's good. Actually, that was all we could make from this market. So when you're looking at these news events for interest rate, would actually be looking for a profit margin that gives us a 2.15% price change before we can jump out of the trade. Otherwise, you can actually jump out of this trade, take profits somewhere here. As soon as the news comes out, then you can take that $2,000. Then as soon as it retraces back to its initial price level, it most often it will make a slightly higher high. And one thing to observe about this high is that while it's passing, for you to jump in for the next trade down, while it's making getting past this point, the only way to confirm this buy is if as a whole or partly these candles give you a 0.1% change in price. So I personally do not see a place to sell here. I would probably wait for this, but we don't have volumes. Possibly catch it in Asia the following day. You can see buyers give you 0.9% mark to sell, and then yeah, you jump in for these profits too, and then all these profits would run all the way to, you do the math, you're looking for a 2.15% change in price. Set your take profit there at $1,900, and yeah, that's how you make money from interest rate decisions starting with the Asia market. Thank you.